Prasinos, Editorial Director of Investing Daily, with a video presentation for Friday, July 9. To view our full range of publications, go to our website at investingdaily.com. Also consult our subsidiary website, streetauthority.com. You know, economist John Maynard Keynes, he's a giant in the field of economics. Simply put, Keynesianism is a demand-side theory that calls for greater government expenditures to stimulate demand during times of economic distress. This stance is often referred to as priming the pump. The Keynesian approach is controversial. In fact, I'll probably get hate mail from the acolytes of Ayn Rand. However, during the coronavirus pandemic, we've seen how priming the pump can prevent an economic collapse. In this video, I'll look at another concept introduced by Keynes and apply it to current market conditions. In the meantime, worries about inflation weighed on the stock market Thursday, with all three U.S. stock market indices sharply falling. Okay, back to Keynes. That's him, back in his heyday. In 1936, when he was advising FDR during the Great Depression, Keynes evoked the metaphor of a beauty contest to describe the stock market. He described a newspaper contest in which 100 photographs of faces were displayed. The winner would be the reader whose list of 6 came closest to the most popular of the combined lists of all readers. The shrewdest strategy, Keynes noted, isn't to pick the faces that are your personal favorites. It's to select those that you think others will think prettiest. Accordingly, it's a sophisticated understanding of crowd psychology that generates stock market winners. Various 2021 outlook reports from some of the world's biggest money managers tell us that inflation hedges will be the prettiest of all in the contest for investing dollars, generating high demand for investments that can protect against inflation. That's why you shouldn't delay in adding inflation protection to your portfolio while it's still affordable. The major institutional investors are now gobbling up investments in anticipation of inflation, which means that independent investors who act too late may get crowded out of buying inflation-proof securities at reasonable valuations. Take a look at the following chart. Higher inflation is indeed occurring, although I agree with the Federal Reserve that it's transitory. Historically, inflation remains quite low and doesn't appear strong enough to compel the Fed to tighten the monetary spigot, at least not too soon. Soaring crude oil prices and a fast-mending economy are helping the energy sector post the stock market's biggest gains so far in 2021. An even stronger performance for energy equities probably lays ahead. However, higher energy costs, especially at the gasoline pump, are starting to worry investors that maybe the economic recovery is at risk. Take a look at my second chart. It doesn't help that in Bloomberg's June inflation survey, the consensus of economists again called for higher inflation this year. You don't necessarily need to look at fund manager reports to conclude that inflation may be just around the corner. Soaring demand for Treasury inflation-protected securities, otherwise known as TIPS, confirms that U.S. inflation expectations are rising, with central banks and investors seeking insurance against the prospect that a recovering American economy will feed price pressures. TIPS aren't the only investment that is being targeted for inflation protection. Chief among these inflation hedges, commodities. Prices for commodities have been soaring this year, and they probably have further to run. To combat inflation, commodities should demonstrate 2 characteristics. 1, they're geared to global growth, and 2, demand exceeds supply. A vital commodity that fits these 2 criteria is copper. The industrial world can't function without the so-called red metal. Copper is vital for building construction, power generation and transmission, electronics, industrial machinery, and transportation vehicles. Copper wiring and plumbing are mainstays of heating and cooling systems, appliances, and telecommunications links. This year, as the world economy resumes growth and infrastructure spending explodes, so will demand for copper. For our favorite investment play on this crucial commodity, consult my article that accompanies this video. Well, that does it for today. If you have any feedback, please send an email to mailbag@investingdaily.com. In the meantime, stay safe, stay healthy, and by all means, stay invested.